Hi guys, welcome back. In this video, we are going to explore product costing. So basically, as a CO consultant, when you are going to configure end-to-end business process related to product costing and profitability analysis, both how you are going to configure it or what are the areas you are going to configure, including the material ledger, because material ledger is a very critical area. So like product costing, whether you are going to only configure a plant cost or end-to-end, you are going to configure including cost object controlling. So all these things I have explained in this video. I hope you will like it.
Product costing includes plant cost and cost object controlling. Plant cost means before production if you are going to do the cost planning. So in that case, plant cost will be there. It is also known as your standard cost calculation. For this prerequisite, FI configuration, CO configurations, MM configurations, PP configuration. Now this is my finished product, 20. For previous month, the cost was calculated. Means it's a every month activity. In the beginning, you are going to calculate the plant cost, and in end, you are going to calculate your actual cost. So previous month cost, standard cost was calculated 427. Third period means June period, and fourth period standard cost was calculated with 447. This is our standard cost calculation. Now, being MM user, I can see this cost is calculated with 447 and 447.53. Now I want to see the source, where it is, how it was calculated. Now it is redirecting to the CO cost screen where the user has calculated the cost. Now user point of view, it's just one execution of one report. But in backend, we have to do all the required configurations, then we are going to calculate the cost. Okay, so these are my different cost components, and we have calculated the cost by using multiple components. So this includes my material cost, this includes various type of activity cost, and this includes your overhead costs. Material cost, activity cost, and overhead cost. This cost we are doing, it's a planning of cost. Business point of view, why they will do the planning? With this planning, your books of accounts are not going to be updated. Once you will calculate the plan cost, books of account is not going to update. It is required for variance analysis. Means in the beginning we have calculated the cost. If we are going to manufacture this will be our plan cost. In end, we are going to calculate the actual cost, and we are going to do a variance analysis, means difference between your plan cost and actual cost. So for that purpose, standard cost calculation is required. Is it mandatory to calculate the standard cost? Business functions point of view, of course it is required, but statutory point of view, it is not mandatory. Means if we are not going to calculate the standard cost, nowhere in the books of accounts any impact will be there. We are not going to violate any accounting norms, we are not going to violate any legal norms, nothing, this will not be there. But internal management point of view, this cost calculation has to be there. So this is your planned cost calculations, and as I said, for this the prerequisite will be there. Once plan cost is calculated, during the month various type of transactions will be posted. FI transactions will be there, asset depreciation will be captured, all type of other department, they are also performing their work. Then in end, we are going to, or the production people, they are going to calculate the production. Actually they are not going to do the cost calculation. Production people, they will do the manufacturing, and with reference to that we are going to calculate various type of cost. Okay, so we are going to have a preliminary cost calculation with reference to a production order. Then after that we are going to calculate the simultaneous cost. Then we are going to calculate our actual cost with reference to a production order. Then finally we are going to calculate the variance cost, means difference between your plant price and actual price. All this right now you will not able to understand until, because it's not just one activity, multiple activities are involved here. Once step by step we will complete, you will get the you will get the idea, but just I'm showing with reference to a particular production order. Now I am the PP user and I want to see a particular production order related all the informations. So let me take the first production order. How many items we are manufacturing in this batch? 3 items we are manufacturing. Here it's a close working between CO and PP module, because production order will be created in PP. Production order will be confirmed, operation need to be confirmed in PP. Goods movement will be there, activity movement will be there, all this in PP. Production received will be processed in PP. Then CO team is going to involve there from actual cost calculation point of view. Okay, so here I can see some output. As planned cost already in the beginning I have calculated, so that's why preliminary cost right now I can't show you. But first step, once we'll create the production order, that time we are going to have a preliminary cost, and this first column is going to be calculated. After that, simultaneous cost will be calculated. Then in end, actual cost will be calculated. As it's already the end process, means it's completed. So that's why you can see actual cost column is updated and some variances we have captured. In this variance process, so what we have included here, so we have material components with actual data, activity components with actual data, and your overhead actual data. The previous one, the cost I was showing, which I have redirected from my material master, that is your standard cost, that is your planned cost. This one is your actual cost. Then in end, we are going to have variance. If the variance will be there, so that variance we are going to report. If any type of variance will be there, so that variance we are going to report in both COPA, I mean in 3 places we are going to report that one. In COPA, in material ledger, and in your FI. FI data will be there in your income statement. COPA will be there in the profitability report, and inventory valuation point of view in the material ledger it should be there. Now with reference to the production order, which is 1 all zeros 5, let's see what is the production price difference. Earlier I was showing purchase price difference. Now we will see the production price difference. First we will check the GL report. No, it's not purchase price difference. Purchase price difference is just one component. We want to see the complete production difference. I know the GL account because I have configured, otherwise you need to search it. So I want to see the price difference with reference to a particular production order. So production order number 1 all zeros 5. Okay, so 5769.67, which is here 5767. First we have calculated and its settlement complete. You can see it's settled. This means it is already transferred to the respective place. So I can see it is there in the FI, and this data we are going to transfer to P&L. Same information should be there. We have two profitability report. One is your P&L, that is your FI profitability analysis one, and another one is micro level analysis when we are doing, that is by using COPA. So in COPA also it should be there. COPA, margin analysis, anything you can name it. So all that business example I'm showing on same company code Z300. $576967. How to confirm? This is the same document. We will check the source document. 576967 and check the original document. These are the activities we have. So we have calculated the price variance, and this price variance then we settle, and finally we got the update. So this is my FI document. Now I'm going to check in the COPA, and there also I'm going to find out my source document. I should get the same informations. 576967. Production order. So with reference to production order, the value is transferred to profitability analysis so that we will have an internal operational cost and revenue analysis. So here we have revenue as well as cost. This is my external profitability report, or we have transferred the balance to the GL. Similarly, it should be reported in the material ledger point of view also. Five seven six nine seven 5769.67. So with reference to the same production order. This is one way. Let's say production order not completed. If it is completed, whatever items we are manufacturing, we have completed it, then we are going to calculate the variance. But if it is not completed, then work in process will be there. So on a production order, either you are going to get variance or you are going to get the WIP. Now let me check a different production order. Now in this case, you can see 4 items we are manufacturing but completed only 3. All the process will be the same, means here also we are going to calculate preliminary cost, simultaneous cost, actual cost. This is data related to a production order, but here as items are not completed, then we are going to have the WIP values. So it's showing some value here that we are going to check in our FI. WIP we are not going to transfer to your variance, I mean in COPA, because it's not completed. Means let's say in July, today is 31st July and our production is not completed. So today we have to see how many items we have completed. 3 items completed, that is our finished stock. 1 item not completed, that will be WIP. So it will be balance sheet item only, but it should be reported in the FI WIP value. 5750.77 with reference to production order. Okay, in combining both the areas, means your plant cost and your cost object controlling, including these variance, WIP, everything. So it is your product costing. It seems like very easy, but in practically once we'll configure, many things are combined with each other. So for this prerequisite is FI configurations, configurations, FIMM integrations, PP configurations, COPP integrations, and all the CO month-end activities. CO month-end activity means all the cost center activities, complete cost center accounting configurations, because for recording of a cost, only cost center you may configure, it will work. But when you will go for overhead calculations, or when you will go for this variance calculation, actual cost calculation, a detailed configuration of complete cost center accounting is required, then only it is going to work. So this is my cost center accounting, the entire process need to be configured, or everything need to be configured, then will, because in reality you will find various type of activities are involved, every activity is connected with multiple cost centers, so cost splitting is required. So once all these things will be there, then we will able to calculate the cost. In which order right now I'm presenting, the same order we are going to, once we will from tomorrow onwards when we will start the actual topic, then the same way we are going to configure. So once product costing is done, means we have manufactured the product. The next,
Pradeep,
yeah, go
sorry
ahead.
for interrupting here.
No issue. Yeah.
Like product costing, it's mainly about the to know the cost of the manufacturing, right? Not for the sale.
No,
Cost of manufacturing, right?
cost of manufacturing. Before
Okay.
production, if we are going to manufacture this particular product, what should be the cost? That is our plant cost. And once we'll do the manufacturing, then what in end we are going to see the actual cost. Then we will do a comparison, that is your variance analysis.
You mean to say like it's pure about the cost of goods manufacturing, not for the sale.
Sale
right?
mean, like if you don't know the manufacturing cost, then how will determine the selling price?
Yeah, that's why I'm telling. Like the product costing, it will cover the cost of goods manufacturing, and COPA will cover the sale. Means how
COPA
much
includes
margin.
everything. COPA includes sales and cost both. Profitability analysis, how you will get the profitability when you compare both revenue and cost.
Then when the sale price can determine means can
That is my next process.
okay, okay.
Order to cash or O2C cycle. So here the process will be sales order, then after that outbound delivery, goods delivered to customer. So when we are going to deliver the goods to customer, so that time the cost part we will transfer to COPA. So here you are going to update in FI. Because COX is going to be updated. So what is the accounting entry? COX is cost of sales account is going to debit, FG stock is going to credit. So it is going to update in my FI as well as it is going to update my COPA. So if my manufacturing cost is 400, let's say we are selling one item, that 400 we need to transfer to profitability analysis point of view. Then after that, we are going to have the outbound delivery. Sorry, my mistake. Billing document in SD. Billing document. And that value also we are going to transfer to FI and we will transfer to COPA. So when we are going to now how we can do the outbound delivery after calculation of the cost. So if you have not calculated the cost, that 400 you are not going to get, and on the basis of that cost 400 you are going to add your profit margin and you are going to determine the selling price, and the selling price will be captured when we are doing the outbound delivery. Sales order SD part, outbound delivery, again combiningly you can say SDMM activities. So because first delivery document will be created, delivery document will be converted into billing document, PGI. So delivery is part of SD and PGI is part of supply chain. Then billing document is SD. Then finally you are going to have the accounting document, which is nothing but your accounts receivable. Then we will go for the collection. So collection is purely FI work, but for this what are required? FI configuration, SD configurations. Here FIMM integration is also required because without that your outbound delivery is not going to work. So then finally we are going to have the receivable, then your AR team is going to do the collection. Now you got your answer? Praveen, you asked the question, where we will get the sales. Here you are going to get the sales in the FI point of view. So it will be transferred to
Okay.
COPA and cost also will be transferred to COPA.
Oh, okay.
Okay, now let's take one document. So I'm going to take one sales document. Directly I'm going to take customer invoice. Let's check the document number 14,000. Sales order created. So sales order, again internal sales document. Here you are not going to have any accounting part will be there until unless you don't have the predictive analysis. So if you are doing predictive analysis with reference to sales order also, that output will be there. Let's keep that aside. So here I can see the sales order we have created and many components are coming here. If I will check this one in sales order, many components are there. Now this selling price we are going to determine on the basis of your cost calculation. So we calculated the cost and on that basis by adding the profit margin, we are going to determine the selling price. Many components are there, sales is there, maybe trade discount will be there, tax components will be there, and this is our cost calculation. So we have seen that where we are going to calculate the cost. So cost, after calculating the cost, we are going to transfer that value to profitability analysis, and after selling the product, that revenue also we are going to transfer this one. But again, it's a sales order. So with reference to sales order, you are not going to transfer any values. It's just internal document generated. Then we are going to convert the sales order into our outbound delivery. So this is again delivery document is processed in the logistic. So 2 items we are delivering to the customer, and with reference to that, we are going to have the accounting is involved. Accounting and costing both should be there. Now this first delivery document processed, then material we are going to deliver to customer. So 2 items we are delivering to customer. Then with reference to this one 49006, you are going to have the corresponding accounting document, and the document number here is not this one, expand, this one 49001. This is the result of your not FISD integration. This is the result of your FIMM integration. But source document is delivery document. So cost of sales debit and FG stock credit. Again, FG your balance sheet item, leave it. So this cost of sales need to be transferred to COPA. How the cost was calculated? In cost calculation topic, or in that segment it was calculated. Now this value should be transferred to COPA. So I was there in the COPA report. You can see what was the document here, 854. 854. When it was posted, 28th June. What is the source document? If I will check here, what is the source document? Source document is outbound delivery, document number 49006. If I will check the COPA document, this is my COPA report. So they are also the same document should be there. So with reference to my outbound delivery, my FI updated, in income statement we are going to add that value, plus in the profitability we are going to add the value. So COPA includes cost, means manufacturing cost, plus we are also going to capture the revenue. So after outbound delivery, then in SD we are going to have a billing document. So this is my billing document. Billing document is nothing but customer invoice. So with reference to that, we are also going to have the accounting update, where customer is going to debit, revenue will be credited, right? And other items will be there, output, sales tax and all there. Now this item and this item, these are both P&L item, sales reduction and sales. Both items, although it was captured from the SD point of view, but it is going to update in the finance. So this will be there in the FI, plus it should be there in the COPA. 16. So that means I can say in this sales process, if any other components will not be there as your cost, revenue minus sales reduction minus your manufacturing cost. So in profitability analysis, we are going to transfer. Profitability analysis is your analytical module. So anything we are going to capture anywhere, whether it is cost or it is revenue. So everything we are going to transfer to profitability analysis, COPA. And for that, all the prerequisite configuration will be there. For example, let's say we have not configured SD. We have not completed FISD integration. Then COPA will not work with reference to your revenue part. If you have not calculated the cost, COPA will not work for the cost calculation point of view. So that is why in the same systematic order, we are going to complete our topics, and business process point of view also the same way it is configured. So that's why first I need to complete the GL, so that all my basic books of accounts will be maintained. Then after that we are going to include procurement. Then after that we will calculate our cost. Then after that we are going to do the sales. And by the end of this one, almost all the business process we will complete. Then some miscellaneous topics will be there that is related to your record report. All the closing activities, everything will be completed. So once it will be done, one phase of our portion will be completed, but it is a major one. So all the business process we have configured and we have checked.